Hey, what's up, family? My name is Brehon and I'd like to welcome you guys back to the channel where we love to focus on our own financial and personal development. Now, family, the CPI report is out and we're going to talk about it. But before I do, I'm going to do what I always do, and I'm going to give you guys a word out of one of the books in my library. And I'm currently rereading this book right here, Unstoppable Confidence: How to Use the Power of NLP to Be More Dynamic and Successful. And here it goes. Another difference between who have unstoppable confidence and those who do not is that people with unstoppable confidence trust in their internal voices. Although they listen to others for feedback, they tend to rely more and place more weight on their own internal voice than the voices of those around them. Short and sweet. Sometimes your intuition will tell you things, and oftentimes your intuition is right. So again, believe in yourself, believe in your abilities, and you can achieve the impossible. All right, family, the CPI report has come out this morning, and let's read what we've come across. Inflation hits 8.2% in September, higher than expected as rent, food prices soar. I've been talking about this for 9 months now. Prices of homes are just ridiculous. The price of rent is ridiculous. The price of food is just ridiculous. All right. Now, U.S. inflation surged 8.2% in September, a steeper than expected increase as stubbornly high rent and food costs look poised to ensure another sharp Federal Reserve interest rate hike next month. The September reading of the Labor Department's Consumer Price Index, a closely watched measure of the cost of goods and services, showed an 0.4% increase compared to August, more than economists expected. Core inflation, which excludes volatile food and gas prices, spiked 6.6% in September, up from 6.3% in August. On a monthly basis, core prices increased 0.6%. Now, the Fed is increasing interest rates. And as they increase interest rates, they are supposed to take money out of circulation. And the more money they take out of circulation, the less money consumers have to spend. And as a result of that, the prices of goods and services should come down. The price of automobiles should come down. The price of food should come down. The price of your rent should come down. But the Fed has a responsibility, right, to manage this economy, but they aren't doing what they speak of. Now, the Fed was supposed to take out $100 billion out of the market from June, July, and August. Well, they took out about 40 billion. So even though the Fed is actively being progressive in its approach to stabilize and reset the market, they are falling short. And a lot of speculation is that they don't want to damage or crush the market too much going into election. Now, the only prices that we've seen decrease is gas prices. And why is that? Well, the president in this administration has went into our oil reserves and was releasing 1 billion barrels of oil per day. And as a result of that, flooding the market with our oil reserves helped bring the price of gas down. Now, once the election is over, I strongly believe that the president won't be releasing any more oil, and the price of gas is going to skyrocket. This is just my firm belief, but you can research that for yourself. But again, ahead of September CPI report's release, economists expected to show a monthly increase of 0.3%, up from 0.1% in August, according to Dow Jones data. On an annual basis, consumer prices were projected to increase 8.1%, down from 8.3% in August. The September report is a key data point set to be considered with the Fed's holding its next meeting November 1. Between November 1st or November 2nd. Now, the Fed has been increasing interest rates each time. And it is expected that the Fed will increase interest rates another 0.75%. Some people are even expecting that it may be a 1% increase. So we're going to have to wait and see how all that comes to play. But when we take a look at the market, as a result of that, the market closed at 356 after the meeting came out. After the meeting came out at 8:30, CPI report, the market is down to 349. Now, the market is about to open in about 30 minutes, so we're going to have to wait and see how this thing plays out. But anytime there's a gap down, we may have a retracement back to the open. But with this news, which is I consider bad news, this may be an opportunity to play some put options. So I may be taking a look at the options expiring the week of the 27th. And I may be placing a put option. All right, so I may be looking at a 345 put, and I'm gonna wait to 9:30 to see what the price is on the put options, and I may purchase one at the open. I may wait 30 minutes to see how things play out. But again, this is bad news. The increase is actually has gone against what the economists expected. So the Fed, even though they're increasing their interest rates, we aren't getting the results that economists and the Fed thought we would get. So this is a bad sign, and we're gonna have to wait to see how things open at the market. But I'm looking for 345 put option expiring somewhere the week of the 27th. And I hope you guys enjoyed this video. Again, if you've been watching this channel, I've stated that this is going down. The market will continue trending down. We may get down to 320. We may get back down to 280 or even 250. But the market is trending down, and there is no hope for a reversal in pattern to the upside. Remember, we always have ups, downs, up, downs, but ultimately we are going to continue trending down. Now, family, I hope you guys have enjoyed the rest of your day, and also in this down market, continue adding to your long-term plays, mainly favorite index funds, ETFs, blue chip stocks. Continue buying those, and I will see you guys on the next video. Peace.